Hey everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we dig into the psychology behind the moves today so that we can better understand tomorrow. And today we're going to take a look at one of my favorite Forex pairs, the pound dollar. Very interesting movement today following yesterday's run. Now obviously, Forex is a market that's open pretty much 24/7 or 24/6 and a half, whatever you want to consider it. So there isn't really a hard start and stop time like we would be able to find on the crude oil or the S&P, etc. So instead, what we're going to do is we'll just start from 7 o'clock Eastern time and work our way forward. For us here in the US, that's a pretty typical time to start getting into the office and looking at the charts. So we'll start from that point and work our way forward. But first, before we get there, we have to know what happened in the overnight session. Now, if you were watching the nightly Outlook newsletter that we sent out last night, we were talking about a major area of support between 1.24080 down to 23992. Now, in the overnight session, that did hit several times, several times, and we opened up just above that area. Now, given the amount of support that we've had come off of that location, whether it was from here to here to here to here, or after they broke through and came back to it a little bit later, that is a massive area of support that we need to keep an eye on. And we started off this morning with a nice bull move working its way higher, right? Nice bull channel working its way higher. They overdid it a little bit at the highs, but when they pulled back, they found support off of that level again. And then when they pulled back, they found support off that level again. So this area is still obviously very much in the eyes of the buyers and sellers, treating it with a sufficient amount of respect where we need to keep an eye on it. Now, if we look a little bit closer here, the sellers managed to push down just underneath that prior low. If you draw a line across that low over to here, they ticked underneath it, literally a couple ticks, not much at all, before rocket shipping back up with a massively bullish candle, showing us that it was likely a trap. They whipped out sellers, and they also probably whipped out some buyers that maybe didn't necessarily want to become sellers down there, and they chased after it and became very aggressive on the buy side, and that closed just a hyper-aggressive bull candle closing on its highs, and that is a gorgeous reason to become a buyer and look for continuation on the move to drive the market higher. Now, once we push back up to the highs, we're still contending with this earlier down move from about 4 o'clock until around 5 o'clock. That drop that we had, we need to take that back in order for the buyers to really prove that they're showing up. Obviously, we have nice bullish channels. We have a lot of things pointing to the upside, but until we break out of that, we're going to have a little bit of a line in the sand that we need to contend with. So we get a nice strong push up here from the sellers basically getting whipped out off of that market outlook support area. And we know that likely, yesterday we were looking at being just a range, right? We're buying the lows, we're selling the highs, and if we're cycling off the lows, the next logical place that we're going to go is back up to the highs, and that comes into view with the market outlook resistance that we were talking about as the major objective. Now, because we haven't reached there yet, and we're still trying to grind our way higher, and the bull channel support is arguably still holding nice and strong, we have a nice quick little pullback. They show that the sellers maybe got stuck, and now the buyers are still holding strength here. That could also potentially be an attempted breakout pullback of a wedge top. That gives you another reason to become a buyer to shove the market back up towards the highs. And this is where things start getting pretty interesting, because if we look at this movement, we can see, well, maybe this was just setting up a lower high reversal that failed. And then it tried going a little bit higher, and that set up a higher low or a higher high reversal. That didn't do so well either. Now they're starting to break out. This could potentially be the top of a wedge. So if we look at this in terms of a wedge, we're now attempting to break out of the wedge. They did get a nice breakout, a potential twin reversal back in, that completely failed. It didn't trigger in any sellers and immediately turned right back around and closed on its high, showing that this is more likely now to become a breakout of any wedge that was forming there to attempt to get another run higher for another beautiful reactionary buy to drive the market into our area of resistance. And you can see as soon as it hit that level of resistance, that's where everybody started taking profit. Now, as we always talk about, you don't want to be the first one to the party, right? Selling the first time you come into any area, very, very difficult. I don't so much mind it if you're selling as in profit taking, right? If you're a buyer selling out of your position, that's perfectly fine. But jumping into a brand new sell, yeah, that one requires a little bit more information. We start forming a possible top of a wedge once again. and arguably even a really, really weak one, but a channel working its way up as well. The buyers close outside of it and then immediately shove right back down in a major area of resistance at 24,840. That's a twin reversal. Not only above major resistance from the market outlook video, but we're also looking at the top of a wedge that's now failing. We could be setting up a possible higher high reversal back down again. With that context, that allows you to say, well, even if this is going to continue back to the highs again, and this whole move up is just setting up a pullback to run, you're still likely going to find every buyer who has been in this take a majority of their position off, which should cause a nice drop lower. Now, that drop lower ended up just being enough to pull back into the moving average, pull back to the bottom of the wedge. They get a twin reversal down there, and arguably, if you were still trading at that time, that also fires off another long signal. But just a beautiful back and forth play that we had here on the the pound, rather. You couldn't ask for a better technical outlook. Everything worked out exactly what we were talking about last night in the market outlook video. And you get to see it come to fruition. That's always a really rewarding experience. So a beautiful day of trading on the pound dollar, and hopefully you learned something from it. If you didn't, make sure that you get those levels. Sign up for the Outlook newsletter so that you never miss a beat and you never miss out on these levels ever again. We will email them to your inbox every single time that video is recorded. Outside of that, though, hopefully you learned something. Hopefully you find it interesting, and we'll see you next time.